Greetings, members one and all of the Salivation Nation. Gold and silver will rise because of this special type of inflation. Let's explore. When you look at the metals and how the price has performed over the course of a period of time, well, they go up in price. It's really no surprise to any of us. And I think that is really one of the largest reasons why you can make a cogent argument for acquiring these metals in your portfolio because, well, they beat inflation. That's right. Inflation is one of the biggest arguments for holding silver and gold. And many of us feel that we are really overdue for a massive inflationary scenario, or what some people call hyperinflation. Most of us feel that once hyperinflation makes its way and people start to recognize it, it's probably too late. And so we do protect ourselves with assets that are inflation-proof. And that's what gold and silver do. They act as inflation-proof assets. Now, make no mistake, there are other inflation-proof assets as well, such as land and other commodities and the like, things that are needed and necessary and are, in a sense, don't degrade over time. When you buy a piece of land, it does not degrade, but it can be taxed. And as we're learning here, especially over the last year or so, we've seen that if you make a purchase below a certain dollar amount, well, because of a Supreme Court ruling, agencies and organizations and whenever you make a purchase, a lot of these companies, they're collecting sales tax for the states that you reside. And different states have different laws. So you pay a tax, but it's just one time when you make a purchase. But by and large, silver and gold are inflation-proof, and the prices rise accordingly. And to me, that's probably one of the biggest arguments for not only acquiring silver and gold, but also in the fact that any organization can't really keep the prices down over an extended period of time because of the very nature of supply and demand and the other natural market forces that come into play when purchasing these metals. But they are volatile at times, and we've seen that, especially in times that we've been witnessing over the past year with the pandemic, what we've referred to as the Black Swan event. And this definitely was, in its purest form, a Black Swan event. But there are other factors that come into play that many people don't think about with regards to inflation. There's a special kind of inflation that I believe that people forget about because, as is the case with prices rising due to actual monetary inflation, where by the very design of the Federal Reserve, this debt instrument that we see here, what can you see that's different in this particular note from ones that I've shown in the past? Well, hey, I think this is going to be the note that I show from now on. Is this thing by design is going to lose value each year. And that is something that's quite unfortunate. And it loses enough value that with today's savings rates, just to put it in the bank and park it there, you are losing money every time you store these at a bank, or even when you store them at home. But that does not mean we should not be holding some of these for emergency situations. And I think it's wise to do so. But because of the falling dollar, there are rising prices everywhere. But the factor is in terms of fuel costs. Right now, we're living in a time where fuel costs have gone up fairly dramatically over the past month or so here. It is a little unfortunate for those who need to travel to work and the like. But oil has gone up, and gas prices have gone up for a myriad of different reasons. And that happens from time to time. But by and large, fuel has been far up than it was back in 1990 or 1985, like when some of these other pieces were struck, or 1976. Now, I say that because these time periods come at a point in time where we did have a fuel crisis, high energy costs in 1990, 1991. During the first Gulf War, there were high fuel costs. And in 1973, before this 1976 Art Bar, Day of Freedom, July 4th, 1976, there was a fuel crisis and prices skyrocketed. And in 1980, we saw gold and silver skyrocket for a brief moment of time, too. In 2011, we did as well. But those are anomalies. But by and large, through the course of history, because of high fuel cost, well, that means the cost of production goes up. But not even that is the type of inflation to which I refer. I'm talking about something even deeper that is more profound. And you can probably make a guess as to what it is, because these metals that you see before you here, gold and silver, well, they are finite. In other words, there's only so much of them in the ground. And yes, new discoveries are being made, and you've heard me talk about some of those new discoveries on this channel. But the fact is that it's becoming harder to find good quality sources for these metals. And so that is what is referred to as geological inflation. And I recently saw an interview with the CEO of Wheaton Precious Metals on Kitco talking about this. And that is the increased demand for precious metals and dwindling resources or reserves in the ground. And that is one measure some of these mining companies have established, and even mature mining companies, as to how much more can they get out of that mine that's economically feasible. Well, if the price goes up, it becomes more economically feasible. That is the price of gold and silver, not necessarily fuel cost. If the price of fuel goes up at a higher rate than the price of gold and silver, that means that gold or silver may stay in the ground longer, and therefore the price of gold and silver could rise and eventually get to the point where it's so expensive that it becomes unaffordable for many of us in due course in time, but maybe profitable for a mining company. But what is geological inflation? Essentially, it is the economic viability of a mine or a discovery to be able to get enough gold and silver out of the ground that makes it worth it to enter into the marketplace. And they have to drill deeper. They have to process more ground and more material to get that ounce out of the ground for gold or silver. And it is also understood that silver especially is mainly now, over 75% of the silver that's mined is as a byproduct of like lead, zinc, copper, and the like. And that it will only be mined more if copper and zinc and other base metals, lead, goes up in price. Right now we are seeing copper go up in price, which means that it is more lucrative for these mining companies to produce copper, which means that potentially we could see more silver come into the marketplace, and that may be one of the reasons why silver would actually go down temporarily. But it also means that it could go up if fuel prices go up, even though the demand of copper is there, and we're seeing silver go up in other ways. There's a back and forth in terms of that movement, but I think by and large, we are going to see both silver and especially gold, I believe, rise out of this. But silver as a metal that is recognized just as much, if not more so, as a commodity these days, is something to take into account and consideration. But that could actually be good for silver prices down the road here. And I believe that this geological inflation scenario factor is something that should be taken into account when you make decisions on precious metals in the future. Does that mean they're going to skyrocket? No. Does that mean they can't go back down in price? No. The dollar index plays a huge part. The psychology of the markets plays a huge part. And much of that can operate almost in a sense independent of demand at a given point in time. Although demand is an overall factor, I believe, in the price over the course of time. And there is a heavy demand for gold. It is treasured, and I think that's why it has been so high. People are looking for the safety of gold in these economic time uncertainty, and they're starting to pay more attention to silver now as well. And there's a lot of different scenarios that can be played out here that can affect price and find us, in a mode where accumulating these metals is certainly something that is a good thing. So moving forward, we'll see how it plays out. But I think it's quite interesting to see the different factors that can come into play in terms of price when we accumulate these lovely precious metals. Gold is a metal that packs a lot of value in a very, very small space, and I think that is part of the appeal that many have to this metal, because one of these particular coins here, made of 4/9 fine gold, you can certainly store a lot of value in a very tiny space here. And it's very portable, it's fungible, it is been treasured by kings and different empires and adorned in jewelry and the like for thousands of years. And it is also recognized as a Tier 1 asset by the Bank of International Settlements. Silver is unique in its properties, and mainly for its reflectivity and its use in various different products out there today. It's probably one of the most versatile metals that you ever will find. And obviously it is treasured and recognized for its beauty as well. And I think that both these metals will certainly be served well by the coming geological inflation that we're seeing in mining. Does that mean we're going to run out of silver and gold anytime soon? No. I believe they will be mined according to new discoveries and technology that's out there. You've heard me talk about that on this channel before. But I do think that understanding the mining process and what it takes to produce an ounce of either of these metals gives you a whole new appreciation for the time and effort and energy. And in some cases, probably lower margins than you think, considering how some of these metals are mined over the course of time. But notwithstanding, why do we accumulate precious metals? Is it to get rich? No. Is it to make money? No. Unless you're a collector or you are a speculator about the spot price and can greatly time the markets. These metals we accumulate to preserve our wealth in times of economic uncertainty. That's the best thing we can hope for when stacking the metals. And that's the message here, is to press on and encourage you as you consider gold and silver as a diversification to your portfolio in the physical form as a way to protect yourself. Some people say you should have anywhere between 5 and maybe even as high as 35% in some cases of your portfolio in precious metals. And it's not a bad idea. You have to do what's right for you. Do your own due diligence and research. There's a lot of factors that affect the price, but geological inflation is probably not considered as much as it should. And to me, that is bullish for precious metals in the long term. It is fascinating. So there you have it. Let me know your thoughts in the comments section below about this, why gold and silver will rise. We know there's a lot of other factors out there as well. But what are your thoughts about this and other things with regards to precious metals? I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe. Gold and silver.